Today on Fear and Greed, house prices in Sydney, Melbourne, Canberra and Darwin fall. The competition watchdog sues Optus over its selling techniques to people, including those with intellectual disabilities. And Starbucks decides that an order of a venti vanilla bean frappuccino with 2 pumps of peppermint, 1 pump of white mocha and 2 scoops of Java chips using heavy cream isn't good for business. All this plus news on retail sales, soaring gold prices and much more. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Friday, the 1st of November 2024. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael. Well said, that frappuccino order. You did well.
Quite the order, sure quite the mouthful. And we'll get to that story in a little bit, Sean. The main story, though, this morning, house prices across the nation rose by, on average, 0.3% during October, but Sydney, Melbourne, Canberra and Darwin all went backwards.
In Sydney, the drop in home values was the first month-on-month decline since January 2023, and the downturn was driven by weaker conditions in more expensive suburbs. According to CoreLogic, in Melbourne, the decline continues to trend, which has seen house prices drop 2% over the past year. The mid-tier capitals, wow, they're still performing pretty well. In October, Brisbane was up 0.7%, Adelaide 1.1% and Perth 1.4%. That means Brisbane is up 13% annually, Adelaide 15% and Perth 23%. However, they are losing momentum.
23% though for Perth. That is staggering, right? That is a next level performance.
Yeah, and 1.4% for the month is next level performance as well. But if you 12 times 1.4, which is too hard for me to do, but I'm guessing it's going to come in around 16, 17%, that's actually lower than the 23%. So the momentum is actually coming out of the market. There's a consistent theme across the cities, whether they're going up or down. More affordable areas are doing best. The more expensive areas are doing worst. Now, the reason for that, in those more affordable areas, there are more first home buyers in the market. I reckon that's a good thing. There are more investors in the market. This slowdown in price growth has been accompanied by a jump in supply. That takes a lot of pressure off prices. This isn't a disaster, right? Sydney house prices over the last year are up nearly 4%. Melbourne, I mentioned, are actually down about 2%. Nationally, they're up about 6%. Now, if you could have, 3, 4, 5% house growth over the long term, that's probably about what the economy is growing, maybe a bit more, in fact. So that's actually not too bad, I'd say. But these numbers, certainly the 4 cities you mentioned at the top, Sydney, Melbourne, Canberra, Darwin, house price growth has ended.
Sean, staying in the housing industry, there are some signs of life in the home building sector with approvals jumping in September.
Yes, so building approvals were up 4.4%. It reversed a fall the previous month. There was a big jump in apartments. Basically, I think it's fair to say there's life in the building sector again. Approvals are up about 13% on their low point about 7 months ago. They're running at about 170,000 a month, and that's below the 240,000 needed to meet the government's housing accord, but it is better than where we were. The long-term key to solving the housing crisis is more houses. So these numbers are certainly welcome. One thing just to keep an eye on, completions are lower than approvals. So when you go through the process, you get the approval from council. We count that as one. Completions, we're not actually a 1-for-1 at the moment. However, having been worried about building construction since about 2022, there are finally some good news in that sector.
And Sean, let's finish this part of the show with more economics, which will
never too much economics, Michael.
I thought you were about to say, talking dirty to me. I suppose the way I am. For an economist, this would be very, very enticing. Retail trade figures for September were flat following a boom August. I didn't need to say boom that way, did I?
No, but you did.
I did. I've committed to it. I can't go back on it now. This is all according to the Australian Bureau of Statistics.
So remember a month ago, we were talking about unseasonably warm weather helping retailers. Mm-hmm. That spending has held up. It hasn't grown. Well, in fact, retail sales for the month of September are up just 0.1%, but at least it hasn't fallen back. So things are going okay. Cafes, restaurants and takeaway food services actually was the only sector to rise in September sharply. Anyway, department stores were the worst. I think what's more interesting is now we have the 3 months of the September quarter. If you look at that, it's interesting because July 1, we got the tax cuts. We got that energy bill relief, $75 a quarter, that was, wasn't it? Yes, $300 a year, $75 a quarter. So that kicked in. Volume over the 3 months, sales volumes were up, but revenue was flat. In fact, spending per person fell for the 9th straight quarter. We had migration, kind of explains the difference between the two. Spending per person is now at its lowest level in 3 years. The point there, people didn't go and take those tax cuts and the energy rebates and splurge on other stuff. And that's actually good in terms of keeping inflation under control, because that was always a concern. The tax cuts, people would spend them, more pressure on inflation. Doesn't seem to have happened.
Does that mean then, in the case of the tax cuts, that they are saving that money then, Sean? Or they're just not rushing out and spending it in large enough numbers to have a material impact?
So I think with the energy rebates, it's money that you don't have to spend. So it's not like you're getting extra money. With the tax cuts, it was actually extra money you received in your pay packet. So if you think of it that way, it's probably the tax cuts are more likely to be spent, but that hasn't happened.
Okay. All right. Sean, we have a fair bit to get through. There's a big show coming up. We'll be back in a moment with the rest of the day's business news. Sean, Optus is being sued by the competition watchdog after allegedly putting undue pressure on consumers, including people with intellectual disabilities, to buy phones and mobile plans. This is really pretty disturbing.
It is. The Australian Competition and Consumer Commission Chair, Gina Cass-Gottlieb, said, and I quote, "This case concerns allegations of very serious conduct, as our case is that Optus sold goods to consumers experiencing vulnerability, which they did not need, did not want, and could not afford." Now, the watchdog claims Optus acted with unconscionable conduct that included pursuing debts, continuing after management became aware of weaknesses in its systems exploited by sales staff. This is according to a report in the Fin Review. The case in the federal court also alleges Optus put undue pressure on people to buy phones and communication services, even though some could not use the service at home because there was no Optus coverage where they live. Now, interim CEO Michael Venter came out yesterday. He apologised. He said the telco has sacked several staff. This still has to be tried in court, of course, but he said that the standards of service weren't up to speed.
It's a very quick response, wasn't it, from Optus yesterday in relation to this, when you consider some of the challenges that Optus has had in the past about responding to major issues very, very quickly. It appears maybe some of those lessons might have been learnt, at least in terms of the PR response.
Maybe. It's a legal case, so it's very difficult to say anything when it's illegal. They're only allegations. We don't know whether they're right or wrong. Optus, though, as you just alluded to, has had a very rough couple of years, and so they're trying to get on the front foot in a PR sense. But when the ACCC comes out and sort of claims these things, really hard to fight that one.
Oh, yeah, indeed. Now, Sean, the flight upgrade saga, it just keeps going. Every day there is something else. And now we've got opposition leader Peter Dutton conceding that his office asked Gina Rinehart's office to use her company's private jet to travel from Queensland to Sydney to attend a Bali bombing service.
So Peter Dutton said he couldn't get a commercial flight. He said the government refused his request for an RAAF plane. They costed a private charter, $40,000, unreasonable. So they gave Gina a call. The opposition transport spokesperson, Bridget McKenzie, she's been leading the attacks against the government. Well, she now conceded that she's checking with airlines just in case she received upgrades, because she did find herself in business class at times, and so she's just checking on that. This, of course, all flows from the book on Qantas by Joe Aston, which was released this week. In it, it infers that Anthony Albanese rang Alan Joyce, the then CEO of Qantas, and asked for upgrades when he was Transport Minister. The travel was personal. Now, the Prime Minister's office yesterday came out and said Mr Albanese had never rung Mr. Joyce, had never texted him or emailed him asking for an upgrade. Maybe, but it's taken about 4 days for that to come out. And I think that really is the pointy end of this story. This has opened a Pandora's box around transparency on the perks that politicians receive. And I think we're going to hear a lot more about this one, Michael.
Sean, do you know what it's reminding me of now? Remember, it would have been 6 or 7 years ago now, the dual citizenship situation with MPs, where all of a sudden you had all of these MPs going, you know what, I'm just going to go and double check right now to make sure I don't accidentally have dual citizenship.
Yeah.
It feels like that now with Bridget McKenzie saying, look, you know what, I'm just going to go and double check now to see if I have received any upgrades, because they just know that if this happens, it is going to come out eventually and cause a major, major problem for them.
Yeah, there was a Liberal backbencher that came out yesterday and she upgraded her pecuniary interests register. Don't know whether that's a register, but certainly the register of what, and, said she'd been upgraded a couple of times. I think there are a lot of politicians at the moment just checking to see that flight they took. How come they ended up in business class?
Just by accident. I just sat down and they didn't ask me to move.
Yeah.
Sean, moving on from politics, Wesfarmers held its AGM yesterday and Chair Michael Chaney said contributions of companies like Wesfarmers have been underappreciated in Canberra. So we're not really moving away from politics that much here, are we?
Well, not really. He basically said some changes to employment laws, payroll taxes, environmental laws work against productivity improvements. He said that there seems to be this view that profit's a dirty word and profit isn't a dirty word. And he's 100% correct. Profit is not a dirty word. He really did have a bit of a spray at the government. Otherwise, on the market yesterday, the S&P ASX 200 fell 0.25% to 8,160 points. Couple of interesting ones there. JB Hi-Fi shares jumped 5% after sales figures beat expectations. The banks were a mixed bunch. Some BHP fell fairly sharply. WiseTech Global did pretty well. Canva's worth a mention, not listed, but it did a share sale. Now, Canva, of course, is the software where we do our wonderful social media posts, Michael.
Just a little bit of context here. If you haven't followed Fear and Greed on LinkedIn, head along to our LinkedIn page and follow us on there and see the creation of a couple of days ago that really just demonstrated the fact that you, Sean, and me, and certainly Adam Lang, our colleague, and Luke, we really don't know what we're doing with Canva, do we? And
no, we're crap.
And this
although
was,
Michael, your effort
proof.
was pretty good. Yeah.
Look, I did my best.
Canva's not listed, but it sold some shares yesterday, so as a result, you get a valuation of it. It's up about 23% since its previous valuation, which was only April this year. It's got a valuation now of about $50 billion. If that was listed on the ASX, it'd be the 11th largest company, ahead of Telstra, ahead of Woolies, ahead of WiseTech Global. Quite remarkable.
That really is. Plenty going on as well in international markets, with data out of the US showing a strong labour market and decent growth in the world's biggest economy.
And that hit financial markets. Bond markets trimmed bets of the size of rate cuts in the US in coming months. The Fed meets next week, expected to cut rates by 25 basis points, but no more now. All that information pushed the Aussie dollar lower. It had been heading towards 66 US cents. Now it's about 65.5 cents. Gold, though, Michael, keeps shining brighter and brighter. It hit a new record yesterday, just below 2,800 US dollars an ounce. Plenty going on there. Mostly it's about the fact that it's a safe haven ahead of the US election, ahead of the potential for interest rates to rise. People like gold when that happens. It's up more than 30% this year. Quite a phenomenal run.
Yeah.
Also,
go on.
Figures from China. Yes. Well, this actually sounds quite dull compared to gold. Yeah,
but I could actually see, you just then going, do I finish on a high note? Do I finish talking about gold, or do I just bring the tone of everything down? Go on, you've started now. You may as well bring us down further.
The factory floors around China are busier as a result of the stimulus that's been pumped into that economy in recent weeks. That actually is good news for Australia, because when the factories are busier, more likely to demand our exports.
That was important. I feel like you talked that down too much.
Yeah, sorry.
No, that's right. Just quick mention after the show, Sean, you've got an interview coming up with Michael McCarthy from Moo.
All about investing in overseas stocks. We talk about how hard it used to be and how easy it is now and why you should do it. And you need to do it with your eyes open. You need to know a bit about the stocks and the key reasons why it can be beneficial for your portfolio.
Yeah, it's coming up after the show. It's a good one, so stick around for that one. Coles, Sean, says that sales of its home brands are booming, particularly the premium products, but otherwise turnover is flat.
Yes, so it released its September quarter figures yesterday. Woolies did on Wednesday. Sales at Coles supermarkets are up 3.5%. Woolies actually reported 3.8% growth. Prices at Coles rose just 0.1%. Woolies reported a slight fall. CEO of Coles, Lee Weckert, said shoppers are now seeking out discounts more than they have been in recent years. Shoppers are looking at 3 or 4 more retailers. 3 or 4 more. There you go. 3 or more retailers every week to keep costs lower, according to Ms. Weckert. Coles' strategy, rather than having lots of promotions, they're actually having fewer, bigger promotions, so more half-price promotions, but on fewer items. She also mentioned, and it's a really good point, the competition for Coles isn't just Woolies and Aldi and Costco and IGA. Nowadays, it's also Bunnings and it's Chemist Warehouse and all these other organisations. It's a pretty tough environment for supermarkets, even without the government pressure that's going on at the moment. What some analysts said yesterday, because they're not seeing sales growth and people are looking for cheaper products, the home brands, for example, you could end up getting more discounting as they try to win back customers. Gotta love competition, Michael.
Yeah, that is the moral of the story. And just very, very, very quickly, Sean, got to mention this one. Australia's richest person, Gina Rinehart, already received a mention earlier in the show. Well, she's bought 2 onshore gas projects from Under Fire Mineral Resources for up to $1.1 billion, and that sent the miners' share price up 9%.
Yep, got 2 exploration permits and a third one will be a joint venture. Been a bit of a wild ride for investors on the back of news that founder of MinRes, Chris Ellison, avoided tax for a number of years, didn't tell his board about it. The board of MinRes is expected to hand out its findings of an investigation into all that on Monday.
Okay, turning to international news now, and some of the big tech companies have reported September quarter earnings, and Microsoft's share price fell after it forecast slower cloud revenue growth.
I love this story. Microsoft can't get enough data centers open because there's huge demand for AI services. They need data centers. Microsoft just can't get them online fast enough. Otherwise, its earnings report was pretty upbeat. Meta reported as well. It's going to ramp up investments in AI and the metaverse. Its share price was down 3%. AMD, Advanced Micro Devices, sells chips for AI. That was slower than anticipated. Its share price fell 11%.
The UK, Sean, has brought down one of the toughest budgets in memory with £40 billion in new taxes. These are new taxes.
Yes. So the heart of the plan apparently is to fix the country's broken finances and public services. Keir Starmer's government was only elected in the last couple of months, so maybe you go really hard really early. There's $25 billion increase in national insurance on employers, although that could just flow through to lower wages. There's increases in capital gains tax and inheritance tax. Tax will be 38.2% of GDP, which is an absolute record. Inflation's forecast to increase, put pressure on mortgages. Growth is tipped to slow. Sharp increase in borrowing. Not much good news in that budget.
No, there certainly isn't. Finally, Sean, I've been waiting to get to this story. Starbucks is experiencing a crisis because sales at the world's biggest coffee chain are down. Fewer people are coming into the stores, and the group's share price has hardly moved this year.
Yes, well, actually, the group's share price is about where it was at the beginning of the year, though it tumbled in May, then recovered in September when they got a new CEO. That new CEO is a guy called Brian Niccol. What he has come and said is that people's experience at Starbucks is now very transactional. The menus are overwhelming. The product is inconsistent. The wait is too long. And the handoff hectic. Thanks. Welcome to the job.
So basically, there's nothing good about his business. Is that what he's trying to say?
This guy, he actually came from one of the other fast food groups, and his package is worth about $100 million. So he's really highly ranked. There's also a few other, he didn't mention these, but analysts are saying, well, $8 lattes, that doesn't fly. There's a bunch of other coffee shops now competing with Starbucks. And the one I love, the 8-ingredient drinks take too long to make. So, you'll go into the shop, you're waiting for a long time for that 8-ingredient drink. The other thing is a third of the orders are mobile orders. So people come in and pick up their orders, but that means those who have come and done the line thing, waiting too long. First steps, according to the new CEO, Brian Nicol, don't charge for non-dairy milk, don't increase prices, and they've got a goal of serving in 4 minutes. There you go.
What I love about that story is that he's clearly just gone into it with his eyes completely wide open, just to the challenges of the business, and now has a plan to fix it. I find that fascinating.
Yeah, if you go to a Starbucks in the US, and I haven't been in the US for the last 12 months or so, but you go in and it just takes forever. You go to a coffee shop here, they're friendly, the service is good. Even when they're busy, you still seem to get your coffee in good time.
And it's also better.
And the coffee's so much better. Yes.
All right. Up next is the Fear and Greed Daily interview with Michael McCarthy from Moo, as we mentioned before. And also keep an eye on your playlist at around midday, a new episode of Ask Fear and Greed, our bonus podcast where we answer listener questions. Are coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 1st of November, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.